Investing in stocks is a great way to build wealth, although getting started can feel daunting for many beginners looking to get into the market. But with this quick start guide, you can begin buying stock in minutes, even with just a little bit of money to invest. So how exactly do you invest in stock? It's actually simple and there are several ways to do it. One of the easiest ways is to open an online brokerage account and buy stocks or stock funds. If you're not comfortable with that, you can work with a professional to manage your portfolio, often for a reasonable fee. Either way, you can invest in stock online at little cost. Here's how to invest in stocks and the basics on how to get started in the market. So, you're ready to begin investing in stocks? Before you do that, smash the like and subscribe button. By doing that, you'll be making the investing gods happy. Here's a basic 4-step guide to get you going. Choose how you want to invest. Open an investment account. Decide what to invest in. You have several options when it comes to investing, so you can really match your investing style to your knowledge and how much time and energy you want to spend investing. You can spend as much or as little time as you want on investing. Here's your first big decision point. How do you want your money to be managed? A human investment professional. An investment manager is a great do-it-for-me option for those who want to spend just a few minutes a year worrying about investing. It's also a good choice for those with limited knowledge of investing. A robo-advisor. A robo-advisor is another solid do-it-for-me solution that has an automated program manage your money using the same decision process a human advisor might, but at a much lower cost. You can set up an investment plan quickly, and then all you'll need to do is deposit money, and the robo-advisor does the rest. Self-managed. This do-it-yourself option is a great choice for those with greater knowledge or those who can devote time to making investing decisions. If you want to select your own stocks or funds, you'll need a brokerage account. Your choice here will shape which kind of account you open in the next step. Do you have a good idea of the type of account you want to open? Here are your options. If you want a pro to manage your money, a human financial advisor can design a stock portfolio and help with other wealth planning moves, such as saving for college. A human advisor typically charges a per-hour fee, or around 1% of your assets annually, with a high investment minimum. One big advantage? A good human advisor can help you stick to your financial plan. Here are 6 tips for finding the best advisor and what you need to watch out for. A robo-advisor can design a stock portfolio that matches your time horizon and risk tolerance. They're typically cheaper than a human advisor, often a quarter of the price or less. Plus, many offer planning services that can help you maximize your wealth. The best robo-advisors can handle most of your investing needs. Bankrate's in-depth reviews of robo-advisors can help you find the advisor who meets your requirements. If you want to manage your own money, Bankrate's detailed reviews of the best brokers for beginners can help you find a broker that meets your needs. If you go with a robo-advisor or an online brokerage, you can have your account open in literally minutes and start investing. If you opt for a human financial advisor, you'll need to interview some candidates to find which one will work best for your needs and keep you on track. Use Bankrate's free financial advisor matching tool to help you find a financial advisor in your area. The next major step is figuring out what you want to invest in. This step can be daunting for many beginners, but if you've opted for a robo-advisor or human advisor, it's going to be easy. Using an advisor. If you're using an advisor, either human or robo, you won't need to decide what to invest in. That's part of the value offered by these services. For example, when you open a robo-advisor account, you'll typically answer questions about your risk tolerance and when you need your money. Then the robo-advisor will create your portfolio and pick the funds to invest in. All you'll need to do is add money to the account, and the robo-advisor will create your portfolio. Using a brokerage. If you're using a brokerage, you'll have to select every investment and make trading decisions. You can invest in individual stocks or stock funds, which typically own hundreds of stocks. The best brokers offer free research and a ton of resources on how to buy stocks to aid beginners. If you're managing your own portfolio, you can also decide to invest actively or passively. Passive investors generally take a long-term perspective, while active investors often trade more frequently. Research shows that passive investors tend to do much better than active investors. The key to building wealth is to add money to your account over time and let the power of compounding work its magic. That means you need to budget money for investing regularly into your monthly or weekly plans. The good news is that it's simple to get started. How much should you invest? How much you invest depends entirely on your budget and time frame. While you may invest whatever you can comfortably afford, Experts recommend that you leave your money invested for at least 3 years and ideally 5 or more so that you can ride out bumps in the market. If you can't commit to keeping your money invested for at least 3 years without touching it, consider building an emergency fund first. An emergency fund can keep you from having to get out of an investment early, allowing you to ride out any fluctuations in the value of your stocks. How much do you need to start? Most major investment accounts don't have a minimum, or the account minimums are extremely low, so you can get started with little money. Plus, many brokers allow you to buy fractional shares of stocks and ETFs. If you can't buy a full share, you can still buy a portion of one, so you really can get started with virtually any amount. It's just as easy with robo-advisors too. Few have an account minimum and all you'll need to do is deposit the money. The robo-advisor handles everything else. Set up an auto deposit to your robo-advisor account, and you'll only have to think about investing once a year, at tax time. Once you've opened your account, deposit money, and get started investing. If you've opted for a human advisor, the minimum amount can vary substantially. Many advisors demand a minimum of $100,000 or more to get started, and that figure can go up quickly from there. You've established a brokerage or advisor account, so now's the time to watch your portfolio. That's easy if you're using a human advisor or robo-advisor. Your advisor will do all the heavy work, managing your portfolio for the long term, and keeping you on track. If you're managing your own portfolio, you'll have to make trading decisions. Is it time to sell a stock or fund? Is your investment's performance a signal to sell or buy more? If the market dips, are you buying more or selling? These are tough decisions for investors, both new and old. If you're investing actively, you'll need to stay on top of the news to make the best decisions. More passive investors will have fewer decisions to make, however. With their long-term focus, they're often buying on a fixed regular schedule and not worrying much about short-term moves. Do you have to live in the US to open a stock brokerage account? No, non-US investors are able to open brokerage accounts and invest in US companies, but they might face a few additional hurdles in getting started. Investors residing outside the US may need to show additional forms of identification to prove their identity when opening an account, and there can be even more forms on top of that to ensure proper tax reporting. Be sure to check with the broker for guidance on investing when living outside the country. How much money do I need to start investing in stocks? Not much. Most online brokers have no minimum investment requirements and many offer fractional share investing for those starting with small amounts. You'll want to make sure that the money you're investing won't be needed for regular expenses and can stay invested for at least 3 years. Building up some savings in an emergency fund is a good idea before getting started with investing in stocks. Do I have to pay taxes on the money I earn from stocks? If you hold those stocks in a taxable brokerage account, dividends and realized stock gains are taxable. The rate you pay on capital gains will depend on how long you've held the investment and your income level. If you hold stocks in tax-advantaged accounts such as a Roth IRA, you won't pay taxes on gains or dividends, making these vehicles ideal for retirement savings. What are the best stocks to invest in? At any point in time, any stock may be the best to buy, because stocks can fluctuate a lot over the short term. But the stocks that increase in value over time grow their sales and profits year after year. It's vital to research the stocks you're investing in and understand them thoroughly. This approach requires a lot of work, and it takes years to build enough expertise to succeed. For many investors, beginner and advanced alike, it's easier to find stock funds with strong long-term returns and then buy the top funds. Are stock funds good for beginning investors? Stock funds are an excellent choice for new investors because they can deliver strong returns without having to do much legwork. You can buy stock funds as either an exchange-traded fund or mutual fund. A stock fund invests in dozens or even hundreds of stocks, and by buying the fund you effectively own a stake in everything owned by the fund. For example, funds based on the S&P 500 index have a strong track record of growth, averaging about 10% annually over long periods. These funds hold hundreds of stocks in the index, which includes America's most successful large companies. You can buy a share of an S&P 500 ETF just like you would buy a share of stock at any brokerage. Is stock investing safe for beginners? Stock investing can deliver strong returns over time, but returns can fluctuate tremendously in the short term. Those who buy individual stocks must have undertaken significant research or they risk losing significant money. Buying individual stocks is much riskier than buying a broadly diversified index fund. which may own hundreds of stocks and tends to go up over time. When buying an individual stock, your success relies on only that company. If the firm does not perform well, the stock may decline in value permanently. In the worst case, the company could go bankrupt, and you could lose your entire investment. However, when you buy a fund, you've reduced your risk by relying on many companies. Investors can also reduce their risk by taking a long-term perspective, especially with stock funds. Experts routinely recommend that investors plan to hold an investment for at least 3 years, though longer is better, so that they can ride out the market's volatility. Bottom line. The great thing about investing is that you have so many ways to do it on your own terms, even if you don't know much at the start. You have the option to do it yourself, or have an expert do it for you. You can invest in stocks or stock funds, trade actively, or invest passively. Whichever way you choose, pick the investing style that works for you. If you want to learn more, hit that subscribe button and comment below what stocks you're interested in. Also, see these 2 videos? Click on them to learn more and become an investing icon.